Fed policymakers are set to do their 25 basis point cut next week. While everyone is just chasing tech stocks, there's 3 undervalued stocks that are providing a 30 to 80% upside plus dividends. I'm going to show you exactly which stocks those are. Welcome back. I'm your host, Ali, and today we're going to dive into some undervalued stocks that are just waiting to blow up. Now, the rate cut is coming September 16th or 17th, and the market's pricing in at 25% basis points, which is great for some of these sectors. Smash the like button, subscribe, and let's dive in. In today's video, we're going to keep it straight to the points. We're not going to do anything flashy, just give you data. The first one on the list is Campbell Soup, ticker CPB. This is a staple company. It's been around forever and always gets government backing. They're currently trading around between $33 and $34 per share, with their fair value estimated at $62 per share. That's around 45 to 48% discount. Dividends, 4.5% yield. Q3 2025 organic sales, plus 5%. Their earnings per share came out at 80 cents versus the 75 expected. Now, why is the stock good? Why does it rise when the low rates come in? That's because it's reduced borrowing costs, and consumer staples rally when these policies ease. Now, let's look at the catalysts and the data points exactly. The catalysts, $250 million investment in supply chain. Sovos Brands is integrating with them, boosting their margins. They had a $950 million cost savings that they realized just this quarter. Now, let's talk about targets and risks. The conservative target for the stock is $50, which is about a 47% upside. The optimistic is $62. That's an 82% upside. Your stop loss should be around $30. If you're buying in around 33 to 34, that should be your stop loss, nothing higher and nothing lower. Make sure you understand how to set up your stop loss so you can manage your risks. The next one on the list is Alibaba, the Chinese online giant, currently pricing at around $135 per share. Their valuation should be around $200 to $220 per share. That's about a 40 to 62% upside. Their current cash flow and earnings, free cash flow, over $20 billion a year. That's crazy. They returned about $4.1 billion to shareholders through buybacks in just one quarter. Very, very good performance. Now, their revenue this last quarter was around $36 billion, up 6%. Let's talk about their stimulus package that is boosting their business. China's recent stimulus measures include 50 basis point cut, new programs to support property markets, direct funding for companies to buy stocks. And this is probably the most aggressive stimulus we've seen from China. The last time this happened, Alibaba surged from $78 to $106 in 1 month. So keep that in mind. I'll be honest with you and transparent as I always am. This is the highest risk stock because of geopolitical headwinds and tensions could flare up again and could cause massive issues. Let's say they decide to delist Chinese stocks from the NYSE. Could happen, but we don't know. Now, if you're willing to accept this risk, there's a huge potential for the stock, but don't bet the farm. This stock is big, so it's not gonna go out of business. 5 to 10% of your portfolio is likely a good measure. Let's talk about price targets. Conservative target, $170. That's about 25% upside from here. Aggressive, $220, 62% upside. The stop loss, if you're buying right now at this price around $135, should be around $110 per share. Let's move on to the next one, and that's going to be Fluence Energy, and the ticker is FLNC. What does FLNC do? Well, think about them as the company that stores renewable energy, that is solar and turbine energy, stored in massive scale batteries that could be supplied when the sun isn't shining and the wind isn't blowing. And it's a big business. Now, some of the drivers behind this is the tariffs on Chinese imports, the IRA incentives for domestic batteries. There is a lot of utility demand, as well as they have a really strong balance sheet, $550 million in cash, minimal debt, $80 million a year in MRR, That's recurring revenue from services. Now, they also only have a 1 billion market cap. So in one quarter, they generated enough revenue to cover half the market cap. And that's why I think that this stock, based on these fundamentals, could have up to a 5 billion market cap. They have 4.5 billion in contracts currently. And that tells you that there's a huge upside that this stock hasn't realized. And we need to make sure that we're paying attention. They maintain over 900 million in total liquidity, including 460 million in cash. And they recently secured another 150 million in financing. Now, with the rates going down, financing costs are going to be much less. Let's talk about targets. Conservative target, about $8.10. That's about a 20% upside. Optimistic target is $12 to $15. That's anywhere between 77 and 122% upside if their execution really comes through. If you buy at the current price, set the stop loss anywhere around $5.50. So they're currently trading at around 667. I would like to see a little bit of a pullback and then an upside from there. And that's where is a very good entry point. Now let's talk about a bit of risks. This is volatile. Execution is very key to Fluence Energy. The stock has a beta of 2.67, meaning that it moves dramatically with market sentiment. Okay. Production ramp up issues could, make the stock struggle and take longer to improve. Why now? Well, you're paying about 0.4% of the price to sale of the company. It has, like I said, over 4.5 billion in backlog, and it's in one of the fastest growing segments of the industry. So their market cap should be way higher. Their stock can have a lot of momentum to move up. Some of these larger companies that you already see with a lot of money in them, their stock doesn't have a lot of room to improve because they've already had their big runs. Unless massive amounts of changes come in or new products, those stocks will lose steam. And this stock hasn't had that done yet. If you like this quick analysis type, make sure you smash the like button and ring the bell so you get notified of new videos. And drop a comment below to let me know what your thoughts are about these stocks. Until next time, stay diversified, stay safe, and I'll catch you in the next one.